Hey, Paragon Traders, how are you? Just thought I would take you through a couple trades this week so far and kind of explain what's going on with them. This will be an options weekly training video, but that doesn't mean you Forex guys need to tune out, not by any means. The discipline is relatively, there's a lot of overlap, is what I'll say. As you know, the founder of Maverick told me and tells me a chart is a chart. And that's kind of how he got me to end up trading Forex in the first place. So my hat's off to him. He was right. His name is Rob. But let's go through a couple trades that I put on this week and that are working quite well. The first is on Marathon Patent Group. And you can tell that I'll just move this one up right by its neighbor. The blockchain stocks have just been getting crushed. And I don't know why. I don't care why. All I'm following is the price action. Again, that is the most important indicator. Volume and price action. That's all we really care about. Secondary indicators are nice for confirmation, but we can never let them overrule what we're actually seeing in the candles. So one thing I did, let's go to, no, that's this guy one. So let's go to the Marathon one. So this shows my trade in Mara, I'll call it. So I did a bear call. Since we saw the chart, this is what it's doing. This was as of yesterday, so we know today it actually that looks kind of similar. Oh, this is today. All right, so I did a bear call and did 10 options. Again, the risk reward doesn't look great, but I'm doing it so that I'm virtually assured that, not virtually assured, nothing's certain, but it's gone down so far that I try to do it so that I'm already in max gain territory when I do it. And I usually do more than 10, but for some reason I did 10. I think it's because I have so many of these on right now that the capital was used up. Anyway, so it's a $5 spread. And you can see we're in max gain territory. Here's the price, as it says right now. Let's see what it's doing, what it did after market. So it actually came up to 31, about 31.50 in the after hours, which is fine. Again, my max gain is anything under 37. So what you do is you sell calls there, you buy calls at 42, and let's go back to daily. And this is kind of what you get. This is called a bear call spread. It is a credit spread. I've been doing these every week. You can see it in the trade blog, but I thought I would explain what's going on here. So for whatever reason, when the market gets like this, I think every investor, or most investors, know that the market is pretty frothy right now. And that is to say the valuations right now, I think the valuation on the S&P is like high 30s. Historically, the average is 17. So we're at over double that. And is our economy doubly as good as it usually is? My vote is no, but everybody has their own vote. So I think it's safe to say that we could certainly say that our stock market is not undervalued right now. I think that's safe to say. My opinion is that it's really overvalued, but that's just my opinion, and it doesn't matter. Mr. Market matters. You can't get in the way of Mr. Market. That was one of my biggest problems when I started trading, is I came from a background of valuation. I would value stocks based on their worth, based on their cash flow, their earnings. And that is not a trader's game. We follow the sentiment, we follow the momentum. So the trend is our friend. I'm not into buy and hold anymore. We don't have time. So you can see, the S&P has been, it's had this nice channel. I'll say it had a couple hiccups here, but nice channel ever since, the nasty coronavirus hit us and did the power reversal on us. But now, it's just losing momentum. And today was the first day I saw this white dot above the price again. And when we've seen that, that's the parabolic SAR, by the way, if you want to know what indicator that is, parabolic SAR. And when it's really choppy like this, it's usually an indication of when to sell. But when it's, in a relatively flat market like this, like these two dots, that's not an indication to sell. This is an indication to buy. It's got to be really choppy, like this stuff. Then the parabolic SAR is useful. Anyway, this actually came down very near to the 50 SMA. That's significant that it did that today. And then it bounced all the way back up. That's significant too. It looks like the buyers are not done with this market yet. And the sellers are not quite convinced it's time. But this is the time when we get all of these just, I would say, irrational moves. Like a stock down, 23, 24% in one day. Up, look what it did here. Did the value of that company really change that much in a matter of 2 weeks? And then did it really decline this much in a matter of a week? No. But that's the beauty. That's what creates opportunity for us traders, this volatility. So I've been doing really short-term credit spreads and been doing very well. So every week I collect my max gain and I move on. So let's look at Mara. So again, I did a $5 spread. Tomorrow, this arrow means tomorrow, should this, go down or even come up a little bit. Tomorrow is Wednesday, and I might wait till Thursday. But if you roll this down, you can see I'm already on my short calls, my short 37 calls. I've already made this much money on those. So I might, it's called roll those down to where I think this may end up in 3 more trading days. We'll see. So depending on the price action tomorrow and Thursday, I may end up rolling it down to where I know I'm relatively certain I'm going to be in max gain territory, but yet I want to realize that gain. And I probably won't do it Thursday. Well, I definitely won't do it Friday, but I might do it Thursday. And because if this keeps going down, I could roll this all the way down here and still be in max gain. And the closer I get to where it's trading, the higher the value of that call. And if I sell them, the premiums are going to be high. Definitely higher than the premiums here. As you can see, I only have, right now, these are only worth between 17 and 19 cents a piece. I don't want to wait 3 days to realize 17 to 19 cents. I want to roll that down and see if I can get another few thousand out of that. Now, our expectation is for, of course, our long calls in bear call spread. Our long calls, our expectation is that they're going to expire worthless, and that's fine. That's the nature of bear call spreads. But we want our short calls to expire for as much as we can get. So I probably will be rolling this down. Let's look at another trade I did this week. This one, SkyWest. So I happen to know something about SkyWest, it's a company I used to follow when I ran an all cap growth fund. Anyway, as I explained before I think it was the Blink trade video, when the 20-day SMA crosses above the 50-day SMA, I take notice. And when we have a bull pullback like we did here, as soon as there's confirmation, I want that trade. As soon as there's a confirmation candle right there, this one almost got there. A confirmation candle is when there's a bull pullback, and we see that with the low volume. The high volume took us up and takes us out. But the low volume indicates there's a little bull pullback. Plus, this volume right here, and that's actually supposed to be green, but this volume right here, this candle is actually a bullish candle. It's a hammer candle. That means, it's bullish. So I could have gotten in here, but I wanted to wait for the rule, which is it goes above the prior day's high. And this one for sure did that. So I bought calls here, and you can see I bought. So ignore these $60 calls for a second. All I did was buy 10 $45 strike price calls. Now, my thinking is that if it breaks out and goes on a tear, which they usually do in this case, that's why this is one of my favorite trades. 20 crossing above the 50, a bull pullback, and a confirmation candle. You buy that every time. 9 times out of 10, you're going to be happy you did. So yesterday, this was yesterday's. So let's see what it did today. Type in. Went up even further. So I may be rolling this one up too. But you can see it got into where I am just about. Let's see what it did aftermarket. Oh, it's right at the line. So I am at max gain. So let's see here. What do we have? So yesterday what I did was I call it verticalizing my long calls. I do this instead of a trailing stop, because we all know that every night we give our stocks a chance to gap. Whenever the market's closed for any period of time, that presents the opportunity to have a price gap. And I've had trailing stops that some news comes out overnight, and all of a sudden it opens up in the morning and it has gapped right through my trailing stop, and now I'm holding a big loser. Even though I did the responsible thing and I placed the stop, I'm holding a big loser now. So what I do instead is I will verticalize it and make it a spread. So I have a bull call spread on this right now. So I have a $15 spread. I should have drawn the 45, which is about where this trend line ends. I have a $15 spread for $4.90. Now, to those of you that are new to this, that's great. That means I have at least a little over 3-to-1 reward to risk ratio. Meaning My max gain is this if it closes above 60 by this date. And my max loss is what I paid for, the net cost of that bull call spread. So, and I realize this is a little far out. They didn't have weeklies on this. So I may exit this before we actually get to expiration. And you'll see that here that the pink line is today. So right now, this is worth about, geez, I can't see what that says, 5,500. The green line, blue-green line, is what it is at expiration. So, but the closer we get to expiration, the more the pink line moves up and merges with the green line. Anyway, so that's what I did on these. That's what I call verticalizing. And that's what I do instead of a trailing stop. So those are just two of the trades I've done this week. You can see in our trade blog that this, in a volatile market like this, credit spreads are great, especially short-term ones. Because what we're doing, let me pull up Mara again. What we're doing is that we're selling options that are very close to at the money options. And when implied volatility is as high as it is right now in the market, I mean, there's a lot of volatility in the market. When that happens, that's part of the Black-Scholes model of options pricing. Volatility, implied volatility. So that makes premiums go way up. So I don't want to be buying that volatility, because in the end, when the options expire, that volatility is worth nothing. So as expiration date nears, that volatility is not going to be worth anything to me. So I want to be selling that volatility. Anyway, so that's why you see so many credit spreads going on every week. I think I had a couple more that I've done this week, but I just wanted to highlight those two. One on the verticalizing on SkyWest, and another credit spread on Mara. All right, guys, email me with any questions, but otherwise, happy trading.